We are starting with these topics. We have FTFL, STFL, and TTFL. Now, the FTFL means first time frame level or line, and the FTFL is knowing where the market is coming to, because after getting our storyline, we need to know where the market is coming to or where the market is going to. So we are going to start with the FTFL first. First time frame line or first time frame level. And we always get our first time frame line or level immediately a storyline is set or on continuation after a storyline has been set already. So I'll repeat that again. We always get our FTFL immediately a storyline is set or immediately a storyline is formed or during continuation when a storyline has already been formed. So in this very class, you're going to learn how to identify the right FTFL immediately a storyline is set, and later we are going to do it for continuation. Now, let's say we have a storyline that just played out. So I'm going to look for a storyline that just played out, and I'll show you how to mark the FTFL. Okay, before I do that, I'll do this. When marking the FTFL, I'm going to say if here was the key level that did the rejection and there's a breakout. After the rejection and breakout and a storyline is set, we need only two key levels. We only need two key levels on the FTFL. And the two key levels, not that other key levels don't work, but we need just two key levels. And these two key levels are the key levels that worked very well, that are very strong. So the first one is the supports or resistance, while the second one is QM. So these two key levels are what we always look out for to draw our first time frame line after a storyline is set. So after a storyline is set and we have this, we are good to go. And these other ones are not as strong as these two. These other ones are not too strong, but they are also useful, which is you might see after, okay, let's just focus on the storyline being set and we need the rest. Then I'll put in the ones that are less strong, but are still effective. So after getting our storyline, the first time frame line you're going to draw should be on our support or our QM. So if at this area a storyline is formed and there's a breakout, that means the storyline is set. When we want to draw our first line, what we should be expecting should be something like this. What we expect should be either a support or a resistance or a QM or this. These are the two major first time frame key level we should be looking out for after a storyline is formed. And we are going to look at this inside the chart because we've passed the stage of doing drawing. So let's go to the chart and use this. Okay, there was no storyline here. Let's look for storyline. Okay, I'm going to use USD At least now we can be navigating between other pairs. We have a USD here. This was at this point where you're seeing me drawing this thing. There was a daily reject daily here, daily reject daily. And after daily rejected daily here, there was a breakout. There was a breakout here. Now, if I go to 4 hour, this candle here, this candle here is yesterday's candle. This candle here is yesterday's candle. This one is today's candle. So there was a rejection that was on a Tuesday, and there was a breakout. Was it that same Tuesday or the next day? Let's check. So there was a breakout. Where was the breakout? Rejection here and a breakout on the same day. Now, after that rejection and breakout has been set, immediately there's a rejection and a breakout. It has been confirmed. The next thing is for us to go back to the candle, go back to the time frame that did the rejection. Now, if you are getting a rejection on daily and a breakout on 4 hour, after the storyline has been set, we go back to daily. Now, if we were on weekly reject weekly, and daily broke out, we go back to weekly to draw our first time frame line. I'll repeat that again. If we are on daily and there's a daily reject daily and 4 hour broke out, after 4 hours has broken out, we go back again. That means 4 hours broke out and the storyline is set. We go back again to daily. On that daily, that's where we're going to draw our first time frame line. Now, if you are on weekly and weekly rejected weekly, and there was a breakout on daily, after a breakout on daily and the storyline is set on weekly, we go back again to weekly. And on that weekly, that's where we are going to draw our first time frame line. Using this current example, we had daily reject daily here. We had daily reject daily here. You can see here I did daily reject daily. At the left side of the screen, there is a key level there where the market did the rejection. Now you guys are getting advanced students now, so I won't be doing too much explanation. So daily rejected daily here, and there was a breakout on 4 hour. Let's mark that 4 hour. There was a breakout on 4 hour here. That was where the 4 hour did the breakout. Let me do 4 hour. I think I'm going to, this is my current trade, but I'm going to, let me remove everything. So let's leave only the rejection. So daily rejected daily here, and there was a 4 hour breakout here, which I'm going to do 4 hour breakout, not BOS breakout. Now I'll go back again to daily. If you see, it was the same candle that did the rejection that also did the breakout. Now I'm going to remove this. I'm going to remove this. Let's start with this. Now, this candle did rejection. This current candle that was on a Tuesday did a rejection. And that same Tuesday, the market did what? Did a breakout. So now our bullish storyline was set on daily. So after we've gotten this, what are we going to do next? We go back to daily, which was the daily here. And when we come back to daily, what are we going to be looking for to draw our first time frame? Is going to be on the support. here. This is an A plus setup. So in case you see something like this, an A plus setup, I'll be giving you guys the A plus setup as we go. Now, daily reject daily, 4-hour breakout. The support level there is going to be our first line where we're going to draw our first line of entry. That is the FTFL, first time frame line or first time frame level. Now, this is where we're going to draw our first distance. Then later, I'll start looking for things inside here. We are going to look for things here using the second time frame line, which you're going to do in the next class, not in this session. This session, we want to learn how to use first time frame line. Now, our first time frame line is going to be here. What are we expecting? We're expecting the market the following day to come back to this place, then move. That's what we're expecting from this market. What we expect from the market to come back, test or use this support, then go. You see that? That's what we're expecting. This is an A plus setup when we have daily reject daily and the market created a support and the support is fresh. Remember, your first time frame line must be fresh. Your first time frame line must be fresh. Then after this, what we expect comes back to this place, use this area, the support, then leaves. Now, let's see what the market did again. We expand the next day. Now, looking at the next day, the market did not use that support. The market did not use that support. See that market did not use that support. But this support is still valid if the market decides to come down. But you're going to know why the market did not use this support later. So for now, daily reject daily, we have a support. That is an A plus setup. Inside this support is where we're going to pick the next trade and we're going to be targeting the next draw on liquidity. So had it been this candle, this very candle on Wednesday came back and entered here, we took a trade, we would have been aiming to take our first profits out from here. Now, let's do the same thing with weekly. Let's check out weekly. We have this on weekly. You can see this place I wrote WROW. It means weekly reject weekly. If you see me right, DROD means daily reject daily. So there's a weekly reject weekly here. If I go here, you can see weekly rejected, a weekly support here. So after the rejection, is there a breakout? Remember, this week has not ended yet, but there's a rejection here. And if I go to daily, this same week, there's a breakout. This is a daily breakout on after weekly rejected weekly, the daily breakout. So automatically, if this week ends like this by Friday ends like this, that means we have a weekly bullish storyline. Remember, before we were shorting USD So if the week ends like this, that means we have a weekly bullish storyline. So what am I going to do next? I'm not going to start looking for where to enter the trade on daily. No, I'm not going to do that. I'll go back to weekly. That's going to be the next week. The market closes on Friday. So by Saturday, you can analyze the market now. Now, what am I looking for? Weekly reject weekly, and we have a weekly support. This is an A plus setup. Now, if the market comes, enter this place, and I buy, where will I take out my next draw on liquidity? Supposed to have been this OCL, but it has been mitigated. So I can also be aiming for here because this one is still fresh. This OCL is still fresh. So entering here, I can aim for here. From here to here can be like 1:50, 1:60. If I enter, if I don't have the mind to wait to 1:60, then I can be trailing my stop loss. Or I just take out 80% on 1:30, then allow the rest to run to this point because you don't control the market. So you don't know for sure if the market is going to get to this point. So since you're not sure if the market is going to get to this point, what you do, you take out some percentages when you hit 1:20, 1:30, any RR that fits your psychology. Now, This is an A plus setup, weekly reject weekly, which we have here perfectly, and a breakout on daily. So next week, you're looking for support here. But also note that the market will not always come to that support sometimes. But when it comes back to that support, that's an A plus setup. The same thing we have here again. You see, we have weekly reject weekly. Remember, the rejection can come from any key level. We had weekly reject weekly. After the rejection, there was a breakout, and we had this support. This support is still valid. You get now, but the market did not get to this support. You see, it did not get to come back to this support. This was the week. This other week was supposed to push the market here, but the market did not get here. You're going to learn why, if the market does not come to your support, what you should do next. That's for the continuation. The same thing with let's go for, we've seen rejection and support. Let's look for okay, this one was rejection and resistance. This one is rejection and support. This one is rejection and resistance. Weekly reject weekly, and the resistance is formed. Very strong A plus setup. If the market comes back to this resistance, A plus setup. We have this one also. Weekly reject weekly here, and after weekly reject weekly, there was a breakout on daily. Then we have a resistance, A plus setup. Now, why did this one not continue? It's supposed to push the price more lower. Why did it not continue? Because there was a change in storyline at this area. I see here, this one, there was a rejection here, rejection and a breaker. So that was why this one did not push the price down. But despite that, there was still enough 1:20 in this whole candle. So after rejection and breakout, we go back to the higher time frame that has that storyline, and we look for our support and resistance there. Now, where we don't have support and resistance, what do we look for next? It's going to be either you see a support or you see a resistance. That's what you're going to see, support or resistance. In some cases, I want to show you something now, because not every time you're going to see support and resistance. Let's go back to daily time frame. Okay. Yeah, okay, this one was support resistance. Let's go back to daily time frame. Now, the only time you're not going to see support, what you'll be seeing for your first time frame line might be support OCL or resistance OCL. And how will you be seeing support OCL and resistance OCL? Now, if the market rejects, for example, the market gets to an all-time high or all-time low, that means there's no key level for the market to reject. And also that means the market needs to create a support or resistance and reject it. I'll show you in a diagram. We have something like this, which is a resistance. This is a resistance here. That's the resistance. This is a resistance up here. Now, if we have a candle formed like this, and I'll say this is daily, and this candle rejects this one, and after rejection, there is a breakout on lower time frame. I'll use this one as daily. Let's say this is a daily story time frame, and we have this daily reject daily. This is the only time you will see support OCL or resistance OCL as a first time frame line or first time frame level. We have resistance here, then daily reject daily, then inside this candle, there's a 4-hour breakout. Now, when we come back to this daily, what we'll be looking for, we're not going to focus on this resistance again, because this resistance has been mitigated. It's no more fresh. Remember, your first time frame line must be fresh. So the where we'll be looking for entries is going to be on this OCL. We take this OCL, then since there's a long wick here, then it covers from here up to this point. That's where we're going to be looking for trades. You're going to know how to pick the right area for trade when we get to the second STFL. For now, we're in FTFL. So this is the only time you're not going to look for your FTFL on resistance. The same thing for support. If you have this candle, and we also have this one, we have this candle, also have this one, which is our support here. Then we had another candle that opened. This is rejection. So this is daily reject daily and a breakout on 4 hour. Then after that, when we come back to daily candle here, daily time frame, what we're looking for is for this OCL. That's what we'll be looking for, our FTFL. We're not looking for FTFL on resistance again because support, because support is now mitigated, is no more fresh. Now, if this is weekly, we have weekly support here, and we have weekly reject weekly and a daily breakout inside this candle. When we come back to this weekly, what we are looking for is for FTFL inside this OCL. Then the entries can cover this whole candle, this whole shadow, I mean. We are not going to look for FTFL on this support again because support has been mitigated. The same thing with the resistance. These are the only cases where we are going to look for FTFL on an OCL, which is going to be either support OCL or resistance OCL. Let's see if I'm going to see that on chart. You're going to see that inside the chart. So those are the only scenarios where you look for your first time frame line on OCLs. Outside that, your first time frame line after immediately, remember we are on immediately a storyline is set, not on continuation. This is immediately a storyline is set. What we look at for is support or resistance. But sometimes you're going to get either OCL, that is support OCL, or resistance OCL. Those are the only two key levels, support and resistance key level 1, resistance OCL and support OCL key level 2. So those are the only 4 key levels you're going to look for immediately a storyline is set. And that's the only thing you'll be seeing on chart. You can go and check it out, do your backtesting. That's the only thing you're going to see on chart. Either after a storyline is set, we have our support and resistance, or we have support OCL or resistance OCL. Now, we have a rejection here. You know your rejection already. You have a rejection. And there's a breakout on 4 hour. There's a breakout on 4 hour. Rejection, breakout on 4 hour. Then we come back. This is going to be where the rejection is going to happen. This is where the breakout is going to happen. This is the rejection here. So after rejection and breakout, now there's a breakout. When we come back to daily again, we're looking for first entry. It's going to be, should come from this support here. That's where there's A plus setup. A plus setup. Immediately you see this kind of thing, just know that it's A plus. When you catch your entry here, you're just going to the next joint liquidity. And also note, not market will not be coming back to the support or resistance always. It doesn't come back always, because if it comes back always, everybody trading this strategy would have been a billionaire by now. So the market won't be coming back to that support or resistance always. Now that's when you start looking for FTFL on continuation. So we have this, and we have the support. So after a support, after a storyline is set, the next thing we look for, okay, I've seen a perfect example of that. Now we have a resistance here, and there was a rejection on the resistance. You see resistance, and there is a breakout inside on 4 hour. So had it been the market came back again, had it been the market came back again to this area for FTFL, we wouldn't have used here as our FTFL. Yeah, this is not the first time frame level or line. We're not going to use there. Where we are going to use is going to be this OCL. That's where we are marking it. That's when resistance OCL comes into action. This is the resistance OCL we are going to use. You see? So that's how easy. That's the very easy. It's not something you don't need to overwatch or over practice on that understand FTFL. FTFL is very easy. We are done with the hard parts. The same thing here again. We have support, rejection on that support, a breakout, a storyline is set. Now coming back, I have to be removing this thing so you understand. Now we have a rejection on support. After rejection on support, was there a breakout on 4 hour? Yes, there was a breakout. This was the rejection. This was the breakout here. So after the breakout, what did we expect from this market for us to get an A plus setup is for us to come back to daily, and A plus setup is going to be the market coming back to support OCL here. But the market will not always come back always, but whenever you see it, you're going to grab it. So what if the market does not come back to the support or the resistance OCL? What are you going to do? We're going to study that in the next session. So this session was for us to draw our FTFL immediately a storyline is set, because this is what you'll always be seeing. This is what you always see. Immediately a storyline is set. You always see this. And the reason why some people always lose when trading this strategy is because after a storyline is set, they don't know where to draw their first, where to concentrate, where to focus on to know the first place the market will be coming back to. When you know the first place the market is coming back to after a storyline is set, you don't have any problem. You don't have any problem. Except the market wants to change storyline. That's the only time you're going to lose. Now we have this one also, rejection, breakout, expected the market to come here, but did not come here. When you do your back testing, after now, when you're going to do your homework, one of the homework is going to be for you to back test and send me where you're seeing daily reject daily and market came back to support. Market came back to support. That's what you're going to do. Now you've known that after rejection and breakout storyline is set, the first plane you should be looking at for your first line where you're expecting the market to come to. Remember, um, first time frame line is what? First time frame line is the first place the market is coming to, or the first place the market will be going to after a storyline is set or a storyline is formed. That's the first place the market should be coming to or going to. That's for FTFL. Now you've known that you can easily establish a trade or know what to look out for. We have this one. Let's see this one. This was a resistance. Okay, this was not well defined, so we're just going to ignore that one. We had this one, which is daily reject daily here. And let's check if there was a breakout on 4 hour. Let's see. Daily reject daily. Was there 4 hour breakout? Yeah, there was a 4 hour breakout here. So after the breakout, we go back to our daily because that's where we want to draw our first line. Now, the first line here was supposed to be our resistance, but resistance already been mitigated. So it's no more fresh. Where do I get my next line to pick my trade? It's going to be on the resistance or support OCL. And you see the market came tap into it, drop. So that is it for establishing the first line. The first line. Later, I'm going to teach you how. Okay, I shouldn't be going to that now. Let's just focus on this. So in the next session, also another quick one, we can see this one. We had a rejection here, rejection here. After the rejection, there was a breakout on 4 hour, daily reject daily, 4 hour breakout. So the market coming back, this was supposed to be our area to enter the market. The market came, tapped our OCL there. Remember, I taught you guys about gap. So when you see some candle that looks weird like this, you know already that this candle end here. This one was supposed to open here, but there's a little weird gap here, pushing the market down. But you're not going to start drawing your distance here. You draw it here. So the market came, tap here, and moved back up. So that's for first time frame line for confirmation and when storyline is set. In the next session, we're going to learn how to use this for when the market does not come back to our support and resistance. That's for continuation. That is part of continuation, which is very important. The same thing again, as you're seeing here, daily reject daily, there was a breakout, and you know already daily reject daily breakout. That means the bearish storyline was set, but resistance has been mitigated already. So we use OCL, resistance OCL. The market came into that OCL. All this long OCL line shadow is very good to look into. When you look into it, you know why the market came here. That's when we go to second time frame storyline. So second time frame level or second time frame line, that's the STFL. That's when we're going to learn this one because FTFL is where the market will buy from or sell from. That's for second time frame. That is the exact place the market will buy from. So after learning that, you know that you won't be placing too much trade, not placing 7 or 10 positions because you don't know the exact point. The S one will go to SCFL, you know the exact place you should be placing your buy. So that is it here. Now, you in this class, you've known that after storyline is set, the first time frame level you should be marking should be either your support or resistance as long as they are fresh. But if the support and resistance were the one that was used by the market as rejection, what you draw your first time frame level or line should be on your support OCL or resistance OCL. So what about if the market does not come back to our support or resistance or did not come to our resistance OCL or support OCL, what should we do? That's what we learn in the next session, which is the topic for storyline continuation when the market does not come to our support or resistance. Now, after this, also this one, there was a rejection here and support. Remember, I said that these are A plus setup. When you have rejections, the X reject X, after X rejects X and support or resistance is created, that's an A plus setup. Very, very A plus setup. That's why I'm emphasizing on that A plus setup. So when you see it, you don't miss it. Whenever the market comes back to that place, you don't miss it at all. You don't miss it. Now, we'll be ending this live soon, so we can start the second session. We have another one here. We have another one here. The market came, use the support, you see it. Now, you see, after this market rejected this one, it created a support here. You see, a support rejection and breakout, a support was created. So what do we expect? An A plus setup, the market came, used it and went. So most times what you'll be seeing after rejection, X reject X, Y breakout, what you always get next is going to be support or resistance, or support OCL or resistance OCL. So that's what you'll be seeing most in the market after this thing. While we are waiting to exit and start the new session, let's look for more examples. Let's look for more examples. I think this very one, some of you might have a lot of questions to ask. We have another one here. Remember, this is daily reject daily. Remember, it works the same thing with weekly reject weekly. So I'm just daily. It works the same thing on all time frame. Daily reject daily here. After we daily reject daily, there was a breakout, but the support was already mitigated. So the next candle coming back, we don't expect this candle to come to support again. You expect this candle to come to OCL. And if you see, the market letter came to that support OCL, used it. So from here, all this candle like this shadow to here is valid to look for our FTFL. So it used it and left. This is an A plus setup, a very good A plus setup. When you see it, remember A plus setup. So let's look for another one. Now we've started seeing a lot of these ones. The only time a support OCL or resistance OCL will be the FTFL is when the support are supposed to be there, when the support was the key level that acted like rejection. Look at this one also. Daily reject this breakout and came back. This one has already been mitigated. So the market, you're not expecting market to come down here again. The market came and used the support OCL. A lot of them, what I'm seeing here are continuations, and in that continuation, that's when you start seeing all those types of QM that we learned. We have two types. There's a kind of support and resistance, which I'm going to teach you later. I think we didn't do types of support and resistance. We have two that are very strong, if you are going to learn. Let's look for more. God, practice makes perfect. Now, okay, let me correct this also. When the market, if we had the rejection, after we had the rejection, we have the support, or we have the OCL level, any of them that is valid. While the market is going, we expect the market to come back, tap into it, and move. If the market doesn't tap into it and the market left to a point, and at this area, the market changes storyline, this thing here is no more strong. It's no more strong. It's still valid, but not strong again. So don't be expecting to start putting SS buys here. No, because the market has changed storyline. When this is powerful is when the market, this just happened. Maybe the market just started a bullish storyline, and the next candle came back into that our key level without the market changing storyline. But if the market goes up and changes storyline, that area is no more valid for a buy. You can just use for, you can use for a short time scalp. Don't use it again to say want to buy and expect the price to spike. The same thing when the market is just changed. And after changing, we have resistance, or we have resistance OCL, any of them that is valid. Then we expect the next day the next day candle or the next candle, let us say the next day because we use this on different time frames. We expect the next candle to come into here and tap us in, then drop. But if the market does not tap us in and the market came down, and at this point, the market changed storyline during the pullback phase, don't expect to start doing that this thing here again. Don't expect you want to start selling here and you're expecting the market to drop. No, you're going to lose because storyline has changed. These are only powerful when the storyline is still valid, not when the storyline have changed. Since we're in a bearish storyline, we want the market to come back, tap us in and go. But if the market drops and storyline changes, don't focus on this place again. Don't focus on that area.